It's my first in-person event, I think, after 2.5 years. From speaking at every international fintech event in the world, and mostly speaking about NPCI and the India stack. And I saw the audience drop their jaws when they came to know about real-time payment system and the stuff we are building in India. So speaking at every international event, whether it be Money 2020 or Japan FinTech Week or Hong Kong FinTech Week, to doing only video calls for 2.5 years, it's been quite a change. And so I'm very pleasantly happy to sort of present in person today. Mostly the FinTech story is usually about northbound charts, right? Everything was going up and fantastic, technology has been built, great consumer experiences. Since I've been asked to take a very global as well as an Indian view and also talk about in terms of statistics and data. So I'm going to share a story which is not as exciting and as northbound charts as it used to be. So please bear with me. I'm a big cheerleader of FinTech, so don't take me wrong when you see some of these charts. So let's start with 2021. Spectacular year for FinTech globally. Whether you talk about in terms of customer acquisition, whether you talk about the funding raised, everything was fantastic, right? So we had a V-shaped curve after the COVID when everything went down, and then in 2021 we saw a huge upside, right? So one of the best years ever for FinTech. And just so that you know, basically I built a company called MEDICI. It was a tech platform which could track about 17,000 FinTech startups globally. We are US headquartered and we had subsidiaries in Europe and in Asia. And by tracking these 17,000 companies, we used to come up with a lot of insights. So I have been tracking this space since 2012-13 when it was not called FinTech to today, 10, 12 years down the line. We have never seen a year like 2021, right, in terms of any metrics that you could talk about. But what we are seeing now is exactly the opposite. The situation is pretty grim, and we are talking about, I'll talk about public markets, I'll talk about private companies, I'll talk about a lot of different statistics during this presentation. And towards the end, I'll also share that in the longer scheme of things, it does not matter, right? So you may feel like it's a blip on the horizon when you look at a long term, and I'll discuss some of the data points regarding that as well. What you see in 2019, FinTech industry together, FinTech companies raised about $46 billion, I guess. And then it went a little down in 2020 because of COVID, but then it came back very, very sharply. So it was a V-shaped recovery. But 2021, as I was saying, right, it was huge. Like we went 2.5 times of yearly funding that FinTech used to receive, about $120 billion. And if you created a PPT, like I'm an angel investor in FinTech as well, people were raising pre-product, pre-launch on a PPT at $10, $20 million valuation. So it was insanity, right, which was going on. In fact, the Q1 in 2022 has also been very surprisingly, like China already started going down, the slowdown started there in FinTech space. US started seeing some early signs, but in Q1 in 2022, that quarter has been pretty good. $33 billion raise is almost on the same level as 2021. But now when we saw April and May data, it's actually very, very disheartening. And the amount of funding being raised is going down very sharply. It's much more difficult now to raise rounds in this environment. And I've just, everybody knows that the capital was very cheap and everybody became an angel investor. So it was very easy to raise money, and it's going to get harder. Just to share some stats from 2021, right? The reason why I was saying that 2021 was the most spectacular year for FinTech was because, one, we created so many unicorns, about 237 by 2021. There have been more added since then. But also in terms of sort of, say for example, if you look at the wealth companies and the AUM they added, it was up by 20, 30, 40, 50%, right? It was amazing for these companies. And if you see on the right hand side, which is more of an India perspective, but these are number of customers. The number of retail investors added, by wealth tech platforms was probably one of the highest ever. So overall, fantastic year, right, 2021. And the slowdown is being seen there as well. Now let's talk about what has happened now, right? So we were looking at all the public FinTech stocks, and we looked at the all-time high, which was in 2021 for some of these companies. All of these companies had their all-time high in 2021, is what I meant. and then they are down by 70-80%, as of this month, let's say. And then it's not just about how their market cap has declined, but it's also about the layoffs and the job losses and all of that which is going on, including, let's say, one of the news from India as well. And there are many such stories where massive layoffs are happening, and we may continue to see that for some time. In terms of revenue multiples, we track for LTM last 12 months and then NTM, which is next 12 months. I'll share a couple of data points. So this is, next 12 months, this is forward multiples. FinTech rose like anything, right? It went to 25x revenue multiples. If you see, I think it is October 21, 25x revenue multiples. And it has seen the most amount of decline across different sectors, has went down to like 4x revenue multiples, the last month or second last month. We basically tracked about 177 companies which are public listed, FinTech companies specifically. So nobody actually pulls data on only FinTech companies. We did that exercise. And we saw that there has been a decline of about 75% in terms of market cap, again, between their highest market cap to what it is today. And that's why I said, right, I see a lot of, grim faces, but I am the biggest cheerleader of FinTech. But we have to tell the story how it is. I think this reset was required. The valuations had become very, very frothy. And even in the public markets, we saw companies trading at, look at the multiples there, right? 185, 111, these are revenue multiples, 68 times. Bill.com, which is a very old FinTech company, trading at 67 revenue multiples, right? So there was going to be a time in the journey where this reset was going to happen, and that is exactly what is happening today. We also tracked it country-wise. I think, as I was saying, China, Hong Kong, always the first, whether bringing mobile technology, they were the first. They're also seeing the slowdown come to them first, and then followed by US and some of the other countries. India, obviously, we have very less public FinTech companies, so you won't see that change, immediately. And then in terms of segments, nothing spectacular, but nothing particular to observe. But obviously, lending got affected a lot because of a lot of BNPL companies which were public listed, and they got hit really, really badly. And InsurTech and cryptocurrency, mainly driven by Web3 valuations, have gone down. And then some of the B2B segments where the change is usually seen much slower. So capital market tech, B2B, banking tech, these segments actually see a much slower decline. So that's what we are seeing. In terms of country-wise, we have not seen anything, but as I was saying, right, whatever I'm saying is all backed by data. So if you look at the change, Asia is especially driven by non-Chinese countries. The decline is not that fast, but in US, Europe, you will start seeing this change. Now, so in the next few slides, I'll talk about what does this mean, right? So one of the things which already started in 2021 is a lot of M&A. And this is very specific, right? For example, let's take one segment, wealth tech. Wealth management companies and wealth tech companies in India grow initially very fast, but at a certain scale, they get stuck in terms of scale. And mostly they get bought, right? So for example, Neogen acquired Moneyfront, Cashy bought Squirrel recently, PhonePe just acquired 2 wealth management, wealth tech companies. So this is also very typical by segments, right? And there are some larger deals also happening, but what you will see in the next 2 years is accelerated M&A, lots of acquisitions, lots of people wanting to sell because it's harder to scale. Amidst all this, the thing is that there is still a lot of good stuff which is happening. Obviously, since Nalin was already going to speak before me, so I did not have too many slides on what NPCI and what real-time payment systems have done to India. But the story is incredible. Whenever I talk about this to people in the US and elsewhere, they are super stunned by what we have been able to achieve. And this has led to secondary effects, and this has led to a lot of products which have been built on top of it. So great story, will continue to evolve. I don't think these kind of things will get affected by whatever downturn we are talking about. Another positive story is that the monthly active users continues to grow. We have been looking at the data, for the last few months. It's all going well. Does not seem to affect, but obviously there's going to be effect in the future, especially on the revenues and profitability. Now, as I said in the beginning, right, in the summary, that there's a positive side to it, right? So in 1999, this is Elon Musk. He's standing in front of an ATM and he said, while launching X.com, that we will transform banking, and X.com became PayPal. This was 1999. So over next 10 years, PayPal started growing. That's like the OG of FinTech, and they grew really, really well, but didn't, a lot of people did not notice there was not a lot of entrepreneurial activity in the first 10 years. It took a global financial crisis, and once people in technology would realize the inefficiencies and problems which are there with the banking setup, especially because of global financial crisis, there are a lot of new companies came up. So don't be disheartened by whatever is going on in public markets or in private markets in terms of fundraising, because some of the best companies came up after downturns, whether it be dot-com burst or 2008 global financial crisis or COVID. Amazing companies have come up. Some of them you can see, right? Policy Bazaar, Stripe, Square. And these founders realize that there's a lot to change, both in terms of consumer experience, but also in terms of the business models and how can we change the rent-seeking model of banks to a much better model, right? So great companies are found, and I'm sure in this room there will be many more which will be formed during this time. And so the reason I say that all of this, what we are seeing in the last 6 months and what we will see in the 1 year may not matter in the long run. It's like a blip on the horizon, because from 2012 to now, in these years mainly, FinTech has actually acquired about 6% of the revenue market share globally, which is phenomenal, right? Imagine a 50, 60, 100-year-old industry, and in 10 years, FinTech has been able to achieve this much. But also in terms of market share, right? So for example, Zerodha has more than 15% of the volume of digital equity trading market. And similarly, Remitly, Remitly and handle more than 15% of the inward-outward remittance in their respective countries. Or let's say Alipay and WeChat have 90% market share in payments in China, right? So this is a great amount of progress that we have made in 10 years. Whatever happens in this short period of time won't matter, because in the next 10 years we'll probably double or triple this, and that's how I look at these things. And finally, my message to the founders and the audience is that do not care about market corrections and small things. Obviously, you have to bring in more discipline and you have to be careful about the cost, but I'm sure your investors and your advisors are already telling you all that. But if you have a long-term focus, keep building. I think FinTech is a great space. This is the financial service is the largest industry. It's a $15 trillion industry. So there's no better industry to disrupt. And we have seen great outcomes, right? I met the founders of Marketa when they were a 30 people company in the US, and they are today a $6-7 billion company. And it's a struggle. FinTech is actually harder than any other sector, because one, you cannot export it that easily to other countries because of regulations and a lot of other things. It's also very difficult to cross-sell. Like a lot of people feel that, oh, we will start in payments and we'll start cross-selling wealth tech, insurance and all that. It's not that easy. So for many reasons, FinTech is harder, but it's also very rewarding because of that. And if you understand the game in a couple of years and build a good product, the customers like it, there's no better returns you can get as an entrepreneur or as an investor in any other segment. So very, very positive about this sector, and whatever happens in the short term does not matter. So all the best to founders and entrepreneurs in this audience. Thank you so much.